Hey, welcome to the Real Estate Rundown. I am Dustin DeHart with Keller Home Loans, and this is...
Nick Lehman with KW Las Vegas.
Yes.
Who am I?
I forgot.
It's been a minute. It's been a minute.
Been a minute. Good to see you.
Yeah, good to see you too, man.
It's been a while. We took a little hiatus.
We got busy.
Yeah.
I mean, the market, it's crazy. It's pretty nutty.
Can we say cray-cray? Has it gone cray-cray? Is it official cray-cray mode?
You can't say cray-cray
No?
anymore.
Okay.
No.
I did it.
It's nuts. It's bananas. Bananas is a good one. No, it's really... Man, how busy are you?
Yeah, I can't keep up. There's not enough hours in the day.
I heard you're up at 4 a.m. now.
Yeah, my wife, it's irritating her. So why are you up at 4 a.m.?
You're sleeping downstairs.
I'm literally at the gym at 5, and I'm like, it's still packed in here. Why is there people, So, yeah, it's certainly done a 180 from not that long ago. And, I know we have some market update that, like we thought, the housing market went up a little bit, right, last month.
We thought it. Yeah. I mean, people were telling me I'm crazy, and I don't know if you were hearing the same thing, but it's been, it's still going to go down. It's still going to go down. And it didn't. We called it. We said we were at the bottom. We said, oh no, could it actually go up? It did. We'll talk about that. And I mean, I have like 11 escrows right now. And I'm champagne problems. I
want to ask you about exactly, poor guy. Yeah, but I know, and like becoming a listing agent again is a lot easier, right? I'm talking to people that are like, they didn't even counter back kind of things, right?
Like, it was cool. We had a couple listings that were sitting for a minute, and so we made a couple tweaks. We increased the co-op on one. Anyways, it was nice to get these ones in escrow so you can move them along so that the sellers can do what they need to do. But we had a couple. There it is. Look, it's another deal. Another deal live. Is it Neil?
It's Bernie Sanders. Bernie Sanders.
Bernie Sanders.
Yep. So Bernie, I'll call you back.
No, but I mean, the newer listings we took, they're just we were agent number 3 on one. Been on the market since October. We got it under contract in like 11 days or 12 days.
Because you did an open house? Was that what it was? No?
No, they just had really bad photos. We took really good photos.
That does help.
No, I mean...
over the weekend, since the weekend, we've had 5 contracts. Yeah, 5. Wow. I had... One of my agents, he's trying to buy a house, and he put 4 offers in, didn't even get a sniff yet. I mean, he is trying to get closing costs.
Okay, so the closing costs possibly going away.
I know.
Something else we talked about.
Yeah, no, and not possibly.
But they are, I guess.
I did get one the other day with, I'm like, good for you, kid. Nice. You got some closing costs.
I just gave you one with closing costs.
I know you did. Yeah,
$10,000.
I know. That was a
on 360 or 365.
A little bit of a surprise, but I mean, I don't know, what was it, like 2 months ago? I was telling a story about, look, this guy bought at this price, right?
Yeah.
400. House was about 460 not that long ago, right? Yeah, the rate's higher, but I got $10,000 in closing costs.
Right.
Just doing the math, it took like 8 years to recoup that higher rate, right? Meanwhile, we're going to refinance them to even lower rate. And this was the narrative I just kept trying to beat into people's heads. Some listened, most didn't.
And now everybody's going to follow the masses. So we're going to be back to multiple offers or less closing costs. And believe it or not, I had a colleague or a coworker in our office go to new build today. Yeah. Wait list.
Oh, yeah.
So
are they still giving out 4.99 rates? Probably not. Right?
I don't know. I didn't ask what community. He just texted me. He's like, bro, you're not going to believe this. We're waitlist again. Like, man.
I mean, we knew this was coming. I didn't think it was coming this quick. And one of the reasons, rates, I've been talking about this CPI report that happened today.
Is today the day?
Today is the day, May 10th. And it came out today.
And?
Well, it was good. It wasn't great.
Okay.
But the reason we thought it was going to be great, that reason stuck. That was there, right?
Okay.
I kept saying it was this shelter component. Finally, it's coming down, and then we're replacing these high numbers. That took place. However, Rick, if we can pull up, let's see this slide. So these were the numbers.
Okay.
The headline CPI went up 0.37%. It's not like I calculate these numbers.
Yeah.
So Barry Habib, and who runs MBS Highway, whom almost every loan officer subscribes to, originally he was projecting that to be way lower and the core to be a lot lower, right? So
Okay.
year over year, we're down 0.1% on each of those numbers. Now, over the weekend, right before they release these reports, there's a couple investment banks called Chase and Goldman Sachs who have a lot of money and some smart people.
I've heard of them once or twice.
Yeah, they're like, oh, hold on, I don't think this is going to be that great. And on Monday, if you can pull the next slide up, Rick, we did get that news from those two institutions.
Okay.
And Barry kind of did a little head fake on us and said, this might not be so good. So what happened was, here, look at that. Used cars went up 4.4%, like just out of nowhere. Even though they've been down like almost 6% over year.
Okay.
So it was just a crazy fluctuated number.
weird,
Yeah, and
okay.
of course I haven't sold my car yet. So now that's not going to continue because if that happens, they'll go up 50% a year. I think we all understand used cars aren't going up like that, right?
Yeah.
The other thing was gas. Last month, OPEC restricted some supply.
Yeah,
We got some
they
gas
did creep
prices
back up.
sparked up. They're gonna, so that'll help us next month. We don't
Okay.
expect the used cars to keep telling that kind of increase,
Yeah,
So
that's odd.
the point is, you can get rid of that now, Rick. The shelter component is coming down. It's
Okay.
only going to keep coming down.
Okay.
So it was a good day for rates. It wasn't that glorious day.
It wasn't
the
the mic drop day that you were. But
and it could have been if it wasn't for those two things. We would have been singing.
All right,
we
all right.
would have been popping champagne right
but
now.
would you say we're pacing towards?
Absolutely.
Okay.
And again, this May 10th wasn't the be-in of all of everything, right? This was just the start to where we're going,
Got
right?
it, got it.
And that's still happening. Now, I thought by June, we're into fives no matter what. We still may get there. But
right.
I look, by July and August, we're there. Like
You're in the fives by July or
100%. We're going to, this summer is going to
With
be
this
great for
inventory?
rates. I know it's going to be nuts,
gonna
right?
be-
It's literally like I don't even know what to say about the market. Like I swear, I think what was it, May of last year it was at our high of 485. I mean,
Yeah.
I'm pretty sure next year, not that far away,
Yeah,
we're
right
gonna be
back- right back to 485
right back to
median.
485. I mean, the way
That
it's
would
going.
be like a 12%.
And I know, you're going to go over the numbers, so we won't get too into that on
Okay.
the rundown. But yeah, like even sales they were down a little bit from month to month.
They were
you know?
volume, but the inventory is so
So
low
low, I
that
know.
when you compare it to the amount of homes that's available, the ratio of what's available to what's selling is
Right.
is a solid number.
Yeah.
And I have some slides of why
Yeah.
you're not seeing that volume is just simply because people are not putting it up for sale. And why would you
Yeah.
if some of those sellers don't have to sell and you're sitting on
Right.
a 3% or a 4%
Sure.
rate? You're not gonna
Yeah,
throw
no,
it up for
that's
sale.
not
So
changing anytime
No.
soon, So,
It's
and I
gonna
don't.
take some life to happen.
Yeah, the life events are going to happen,
Yeah.
but they're far and few between
they
from
take
just
time.
people like, back when everybody was selling their house to buy, because
Yeah.
of, FOMO and I need a bigger house, that's all gone. And
You gotta
yeah,
have a
like if you
baby.
got a 2
Are you having a
point.
baby?
No, I'm not.
So
I'm
you're
not.
staying put. And
Yeah,
exactly.
If anything, I don't need two of my houses
Another
I have. I could
dog?
maybe
Another Frenchie?
downsize. Yeah, exactly. Yeah. I don't know where I was going with that, but
I cut you
but
off.
yeah, look, it's a crazy market. There's buyers are coming back in droves.
For sure.
Mortgage applications are going up. Purchase volumes going up. There's even some cash out refinances starting to happen now.
Really?
Because credit cards have gone up, savings have gone
so they
down.
kept spending and
Yeah,
spending and
you know.
spending, so we want to pay.
I mean,
right? What's a credit card rate? Like 27. So
Yeah.
like 7.
You got 'em all maxed
675 is better than
Yeah,
27.
like I'm doing one night right now. I'm wiping out like 75 grand in credit card debts and a HELOC that's at 9% and an RV. Their rates. Actually, it's FHA. Their rates like 6%, and then,
Okay.
but they're saving literally $2,000 a month. It's crazy
On monthlies.
Yeah. So
Wow.
those are starting to come back as
Okay.
well. And
Well, good
then
for you.
like when rates. Look, again, we're gonna have a good summer with interest
We are.
rates. I think next year will even be better.
Wow.
And then there's gonna be a little refi boom from everybody that got in the 7 to 6%
There you go.
rate. So I'm gonna talk about that too. So
Okay.
I did want to talk because we always do a little sports talk, right?
Yeah, there's been some big news.
Yeah, I mean, the Golden Knights play tonight. That's been a hell of a series, right?
Man, they've looked great.
I know.
We kind of talked crap
it.
about them.
I know.
Game one.
Jesus, they're gonna
and
win.
then, no, they're playing solid, and that was a big win to get the dub over
It really
there.
was. Man, it seems
And they
like
just
we've got the right
destroyed them.
coach right now. I mean,
Well, and the goalie coming because the goalie got hurt.
I know.
What do we know what his injury was? Is he out?
Yeah, it didn't look good.
Okay.
But that's my wife was like, "Oh, we're done." I'm like, "Man, usually the Golden Knights. I remember their first year; they went through 4 goalies, and
That's true.
You know,
Everybody's
somehow
just
they
plugging away.
feels like they got the magic back a little bit. We got to get through this
see.
team.
And
They're a hell of a
then-
team. But
Then we can play in
Western Conference Finals,
yeah.
and we should be a big
Seattle
favorite in
or
that. And then
Dallas,
here we
yeah.
go, Stanley Cup, right? I hope I didn't jinx that. But
Yeah.
then the next story is our a baseball team that's coming, not coming. Who knows what the hell's going on with them, right?
They changed the site now.
They did.
We're
They're head
going to-
faking us. They're. So first of all, I'm an A's fan.
Oh, dude.
I was a
for you.
die out of my I'm born and raised in Vegas.
Right,
That was the
right.
team I picked, and in the '80s they were amazing, or in '90s, and then they had Billy Beane took over and they had
Yeah.
those great runs and Moneyball and all that.
Right.
It was hard being an A's fan, right? Like every time
Yeah.
you get to really like a player and he gets good there, he's out, but
Right.
somehow they did stuff to always, if they were down, it was only a couple years, right?
Yeah.
I mean, since he took over, barring the last 2 years, they're like the number 3 in all of baseball in wins, right? And if they had a payroll, they'd actually probably win some World Series. Now, so yeah, they've been flirting with Vegas for a while, right? And then it was a couple weeks ago they said, "Well, we're buying
done.
from the Red Rock.
Yeah.
We're buying
Right.
all this land and entertainment district," which sounded great. And actually, I loved where that stadium's going to go, right? Where it was
The one that
on
two
the
weeks
first
ago?
one, yeah.
Okay. Yeah, by the Wild West.
Yeah, there's
or-
more parking. You don't have to go on
Right,
the strip. I was, and then they're gonna have this huge entertainment district. You
Yeah,
know.
yeah.
And I'm like, this is gonna be great. Now I get it. A lot of people that aren't A's fans are like, why are we getting the A's? They're owners of the worst ever. You'd have to think that these
They'll
knuckleheads
make some
are like,
changes,
right?
for sure.
You never know. But anyways.
And we're tanking now to get to the good
we're-
draft pick.
We're gonna hopefully we land a Bryce Harper or some phenom
yeah.
in the meantime. But now they had faked us yesterday, and
It's
they're
moving
going
it
back
to
to
the Tropicana.
to the Tropicana. So they're gonna blow up the Tropicana.
Right.
Get
saw
out
that.
of here, kid. And then they're gonna plop it right down on the strip.
And
right?
it was a smaller stadium.
It is.
And which
Yeah.
is, I think, smarter.
Right. Less
from a
money
business
standpoint.
perspective,
Yeah.
and to show better fans. Because have you seen these games right now in Oakland?
Yeah.
It's like attendance of 12.
It's 35,000. Yeah, well, that you can't put it. And first of all, the Coliseum's the worst.
It is terrible.
There
It
is
is.
in sports.
But
right?
to show an increase right into the new stadium.
Well, and then they're actually asking for less public money
Correct,
as well,
correct.
which
Which
does
was the
help.
move.
But there's a lot of what ifs. Like, dude, if the A's were like a client of yours, you would have dropped them by now, right? Like, it's 2 years. We're thinking about going to Vegas, but we're still thinking about staying in Oakland. We're not sure.
I want a guard gate,
Yeah.
now I want a condo.
Yeah.
But
No, and then we're in escrow, we're ready to go. Like, no, Nick, I want to go across the street now over to the strip. So let's cancel that one. All right. And then, Oh, by the way, Nick, I still don't even have my pre-approval letter yet. I know, but I'm fine. I'm fine. I got a great credit score, and now I only need $100 million less in down payment assistance. Only, not $500 million. Only so it's kind of head scratching, but. It is going to be cool as shit.
It's exciting.
Oops, did I drop an S-bomb? Well, we can't. It's not the real radio. Like, literally, we're going to have a state-of-the-art football, hockey, and baseball all within walking distance on the strip.
It's true. No,
and that will help real estate. There it is.
That's
That's what it's supposed to look like.
Is it? With the retractable roof. Look
Yeah.
at that thing.
That is going to be cool.
It looks like... It looks like a car.
Yeah,
to be
it does.
honest.
Yeah,
Like,
I mean, who knows if that's
futuristic.
exactly what it looked like. I think some dude just put that together, but I mean, And we're going to probably have some baseball in Summerlin, Major League Baseball going on next year,
that'd
too.
be cool.
I mean, it's great. So, first of all, building the stadium's going to help jobs, which will help real estate, right? Like, I remember when the Raiders were coming, everybody was like, "Oh, your property values are going to increase by." I'm like, "What are you guys crazy?" Like, no, okay, commercial properties around there,
of course,
certainly, right? But my house in Green Valley and yours in Summerlin, don't think it went up in value because the Raiders came, right? Doesn't hurt,
maybe an
right?
Airbnb or maybe
but certainly being one of the biggest sports. I think we are now with F1 and the Super Bowl and everything else.
You're an NBA team away from literally having everything, which is really. I'm sure that's coming also.
It's coming soon.
I'm sure it's coming also.
All right, let's hit the rundown, dude.
Let's do it.
All right.
Let's just go straight into it. Everybody knows what it is. What's an LLPA?
Well,
this is the fun one.
Yeah, we talked about this before, and you go, we talked about that? So I figure if you forgot, everybody forgot, right?
I did. It got some noise later.
It did. It got some big noise. And these are loan level price adjustments. There's the new chart. All right. So these have been around since 2009, and they're there for a reason. The FHFA puts, you get a better rate with less risk than
makes sense.
One with a lower risk, right? Investment property, primary, higher credit score, money. We get it now, but they made a lot of wide sweeping changes. Some of them, it used to be 740 credit score was the cutoff. Now it's 780. I don't really understand if 740 has a less risk than the guy with the 780, but we'll go with it, right? Okay. Debt to income ratio is also now part of this, right? But where the big hoopla came was that now you're going to see better rates for people with lower scores and less down versus ones with higher scores. And you know what I mean? Yep. So, and then, of course, it was very political, right? Because this didn't just happen. This happened months ago. It came into effect, but this has been built in rate sheets of every lender for a while now, right? But it's to try and promote first-time home buyers, minority, you know what I mean? So I think that's great. However, the whole I'm robbing Peter to pay Paul part isn't great. And I get it, right? Yeah. So it's another thing the government trying to do that they don't have the money for, right? And they're just going to like student loans, right? Let's just get rid of them. And we have to pay for that, so let's not. So, but again, now they're talking about they even make some, there could be some changes on this. So, all right, April numbers.
All right, the numbers are in. There it is. Median price up from 425.9 essentially, about a point. So we went up for the first time since June, July, almost a year.
We called it. We said $5,000.
We did.
Both of us.
We did. We called that right on the money.
And if I could bet like I called median sales price, I would be a millionaire.
100%. So the big one though is that one in the top right, the units available. We are under 4,000 homes. We were just at 8,800 in October.
That's crazy.
So that is less than a year. You have more than half of the inventory is gone. Now, a lot of factors that contributed to that, but that is something to pay attention to on if rates go down like we're saying, and if rates go down like we're saying, and you only have 3,700 homes on the market, it is just back to business 101 of supply and demand. Rates drop, so now more buyers have the opportunity to get into the market, with less homes. Therefore, if you are a seller putting your home on the market, you're going to see multiple showings that turn into multiple offers, that turn into multiple people being emotional, therefore back to the overpaying. I'm not going to ask for closing costs, waiving stuff. So I don't see this trend stopping until there is any indication of inventory rising. I follow this daily. We are still right at about negative 70, 80 homes a week.
Yeah. And we're still 50% less inventory than a few years ago.
Yeah,
it's crazy.
No, for sure. Which really shows you how nutty it was back then. But let's get to date the rate.
Date the rate. Well, this kind of couples with everything that we're saying, right? So, again, rates are a little high, right? We get it. Now, they're going to come down, right?
Yep.
Look, I'm telling you, if you're a buyer, I would get in now because only the price is going to go up from here on out. Yeah. And you're again, you're going to be in a frenzy of competition, no seller concessions. You still have a minute chance of maybe getting some right now.
Yeah.
Right. And when rates go down, you have the opportunity to refinance into that lower rate. I know date to rate, marry the home date to rate was that big proverbial slang. You know, it was kind of annoying, but it really is a good slang because people have to understand it, right? And I'm trying to explain that to everybody that's, you know, like I talked to a client today who wanted to buy down her rate. I talked her out of it.
Oh, nice.
Because I'm like, look, that rate's going to come down soon. Naturally. I don't know exactly when.
Right.
You put down 25%. You have an 800 credit score. You're in line for a very good refinance here soon.
Sure.
So if we buy that rate down and I call you up in 9 months with a 1.5 lower rate, well, you've just wasted that money, right? So you have to just be cognizant of that, right? Like I know the rates, a little high right now, right? And the history of rates in the United States, it's still pretty low.
Still good.
Back to Bernie Sanders, who just called me. He's a client. I told him what the rate was yesterday. His name's actually Bernie Sandy, but I call him Bernie Sanders.
Got it.
And he said, well, that's not so bad. I remember my first rate was 12%.
See?
So,
Yeah. What?
So again, don't worry about the rate. Rates will come down. They'll go up and down and up and down. If you're working with a good loan officer, they're going to call you when they come down. It's a good time to refinance, and you maybe even be able to do it again. So go get that house right now.
Yeah. Equity Plus. Okay, right back to our inventory. Look at this. Check this out. Owns it free and clear. This is nationwide. We have 38.7% don't even have a mortgage. They don't even care about the rate. Yeah. They don't care if it goes up or down. Don't even really care about equity. They're living their life, free and clear. 68.1% have paid off their mortgage or have at least 50% equity.
Yeah,
so this is an amazing slide that really articulates visually for us why people aren't selling. There was no why there was no crash. Right. We had this little blip that was this 10-12% blip here locally, but the reason why they don't have to sell. And so people that are locked into that lower rate have the equity, they're fine, they survived the blip of the 10% or the 12% down, and there's no reason to sell unless a life event happens. So it kind of feels like we're just being monotonous, or we're saying the same thing in a different way, which is literally what we're doing. Yeah. But we're trying to get people educated in that if you don't buy soon, there's nowhere else for the prices to go but up.
And you know what else is going to go up? Rents. Once the frenzy comes, right?
Just going to be able to spike the rent. And so the question that I am trying to get people to answer by me asking is, are you in your next 7 to 10 year home? Mm-hmm. And if you're good, like, hey, I'm good with this house for the next 7 to 10 years.
Sleep like a baby.
I'm perfect. This is exactly where I want to be. Great. You're awesome. Stay right there. If you're not and you're like, no, I was thinking about doing something in the next 2 or 3, I got to get something else. Like, it needs to be like it was yesterday. Yeah. Like, you need to do it ASAP, because that's going to be your best opportunity to get the most out of it.
Don't wait for real estate. Buy real estate and wait. That's it, right? You like that one?
Did you?
Yeah, I saw that the other day. I don't know. I stole that from somebody.
Okay.
All right.
R&D.
Family opportunity mortgages. All right. So something that is not really known or used. All right. Okay. So I want to talk about it. First of all, it's not a program or a loan product.
It kind of looked like one.
It's a guideline. Oh. Okay. So and it's a guideline that, again, not a lot of people know about. So here's what it is Nick, people have family members that they buy houses for, right? So, if it's your son or daughter, typically you'll just be on the loan with them, not occupying co-borrow, right? But son and daughter have to go on the loan, right? Now, for elderly parents, there is a guideline that says they don't have to go on the loan, right? We do have to document that they can't make the payment. They have the last name, right? It doesn't or wherever they live doesn't matter either, right? But typically that would be an investment property, right? But this isn't. You could now buy this not now, but you can buy it as basically a primary residence,
Oh, nice.
right? So put as little as 5% down.
Okay.
You're going to have a much lower interest rate. And again, the parents don't even know to be on the loan. You can put them on if you want.
Okay.
And the only stipulation is they have to live in there for 12 months, right? And we
Okay.
kick them out, we make it a rental, and we get rich, dude. Sorry, Dad, you didn't hear that. And then there's one with, for like a handicapped child,
Okay.
something like that. You could do the same thing, right?
Got it.
So again, I've seen or heard a lot of people that have, bought houses for elderly parents and that bought them as rental properties.
Okay.
So reach out to us if
Nice.
we got some
That's a
parents who
good
want to throw in a
option for
house
sure.
for a year and kick them out and throw them in the old folks home.
Yeah,
All right.
that's
All right. I didn't say that. Cut that out. Rick.
Recession rates. Okay. So again, we're going to go from a different angle and say something that we've been saying. So, well, Nick, Dustin, like the recession's still happening. Like, well, this is happening. Like, I get the housing pricing and I get the inventory, but like a recession's still coming. And like, interesting. Do you understand what
good.
happens
Yeah.
to mortgage interest rates
Yeah.
should a recession happen? So here's a slide of the last 6 recessions and what happens to the interest rates. So essentially what they want to do then is they want to stimulate the economy to pull it out of a recession. One of the ways to do that is to lower mortgage rates for homes. So those are the last 6. Every single time, 100% of the
Besides
time.
the housing recession where we caused
Well,
it.
this
Yeah.
is rates.
Yeah.
Right? So rates still
it
went
was
down.
Yeah, it was a recession when we went into housing crash, but we get it.
Yes,
rates were
100%.
going,
So if this were to hold true and the recession is coming,
Yeah.
the doom and gloom of this recession, we would now go from what's today's rate? What's a
Yeah, it was 6.5.
right back to Dustin
Yeah.
calling his shots,
Yep.
pointing finger, home run over the center field fence here of we're going to be in the 5s in June, July, August.
Yeah.
This slide suggests that could be coming should there be a recession.
Yep.
Combine that with the 3,700 homes on the market, you're right back to increased pricing.
Yeah,
Buyers
100%.
pulled off the fence.
Yeah,
Just
we're
another
batting
way.
1,000 basically on recessions with home prices. Sorry, I meant home prices actually go up as well.
Correct.
Except for the housing crash, which
4 out of 6.
which we understood.
Right,
Like,
yes.
that was
That is
the one
correct. That was the one.
anomaly. But yeah, every time
Yeah.
rates go down, and it's because when there's bad things with the economy, it's good things for rates. It's
is.
real simple.
Yeah.
So yeah, and that's been reflected into the estimates going into next year as well, right?
Sure.
Now, we get it. The one bad thing is some will lose jobs, but look, we got more demand than we need right now, right?
For sure. Especially here locally.
Right.
Like, I mean,
Yeah. And there's plenty of jobs
The
in this
restaurant I
town,
went to
and then
this
all of a sudden
morning,
you've dropped
they
rates a
need
point and
to
a half.
hire
You
more.
don't think we're going to have a problem
no,
with demand, right?
it's going to be it's going to
so-
be bananas. I'm excited. I just hope people take what we're saying, to heart.
Yeah.
Or I don't know how much more evidence we need to provide to, make a decision. Let's get
Mm-hmm.
proactive. Start building the best vehicle for wealth, which is home ownership. And
It is.
let's get you out there.
Yeah, and I'm talking to a lot of younger people. Some of them are in the industry or not, but they get it, man. I gave the Brink is a team. They're one of their ISAs. He's going to buy a $160,000 condo.
Oh, nice.
And he goes, I hate where it's at.
Yeah.
He gets it. He
Yeah.
goes, but I'm going to live there a year.
Right.
And then we're going to get more commissions, and then he's going to go get another
Yeah.
one. And then he's going to go get a duplex.
You gotta start
and then in
somewhere.
6 or 7 years when he's making real money, maybe he gets married, he's going to buy a
Right.
house. And then
Right.
just keep doing that. I mean, that's
Just-
really, because people, they're like, how did he got all these houses and end up 20% down? Well, that's how they do it.
It starts with the first one.
Exactly. Get that first one.
starts
Get
with
in
the first
early. I get it. It's not your dream home, but who cares? That you're going to get to your dream home quicker
Right.
by building wealth through real estate.
100%.
Right? So
Who buys their dream home out the gate?
I was going to think of I had another one.
Did you?
Yeah,
Oh,
and I lost
I
it.
cut it.
I
That's all
lost
right.
it.
It'll
Damn
come
it.
back
All
to you.
right.
Probably
All
right when the show's over.
All right.
Well, good show, man.
Thank you. It was amazing.
You're killing
I'll see you
it.
next
You're
quarter, all
killing
right?
it. No, we'll be back
No,
sooner.
we'll be back. Yeah.
Yeah, man. So let's. Any last thoughts, real quick, before?
Do you remember Deep Thoughts from the old Saturday Night Live thing? Now I'm rambling on. Let's go.
Let's go straight. How to get a hold of me? Best way to get a hold of me is my direct cell. There it is, 702-289-5200. Call, text me anytime. Dustin, how about you, sir?
702-217-3009. All right, guys, it was a great show. looking forward to the next one, man. I mean, it just keeps progressing and progressing, and it seems like, we're actually hitting some darts right now.
Nice.
So
Nice.
well, I just I missed a little bit on the May 10th day.
It's coming.
But it is coming, guys. See you later.